this is going to be a three module sessions. So from tomorrow, we will announce actually later if we will start with our laboratory. Laboratory is actually all about applying what we have learned. Remember, I told you guys, it's just 2%. It's 2%. By the way, a signal. We want to share a signal. Currently, if you guys are trading, okay, if you guys are trading right now, gold, you can actually do a short. So it's going down. We currently have 2 positions of short. It's 0.5 lots. It seems to be making money. So yeah, that's what we said here in crypto box. You not just learn, but we can also give you signals. And these are live signals. These are signals where we put our money in. Okay, so for the audience, for our community members who are actually currently on a trade, you can follow us. Pretty sure this will go down later. Okay, so like we said, we will be starting with our laboratory probably tomorrow. We will announce. So we will encourage our community members to start creating their account in CryptoBox, because you will not be able to follow the laboratory if you don't have an account, you don't have a chart in front of you. And we will be having exercises. Exercises is the way for us to actually apply what we have teach you in the theory. So without further ado, I will not waste much of our time, and I will pass you back to Christiania so she can actually pass you back to Alexis to proceed with our trading training.
Okay, thank you so much, Sir Jonas, our CEO, for opening this training. And without further ado, let's have Alexis, our communications director, to start the training part of this training. Okay, just give her a few seconds while she pulls up her camera. Give me a second.
Okay, so while we're waiting for Alexis to fix her camera, I'm sharing to you our screen, our live trade today. Yes, guys, this is what you got for being in CryptoBox community. We're sharing to you our signals. Currently, it's a short, so it's a sell. Go ahead and sell. You should be making money. So, are you guys ready?
Yes, we are ready.
So we would encourage our community members to please, after this training today, you start creating your CryptoBox exchange account. because tomorrow we will start our laboratory. It's gonna be a hands-on laboratory. We will guide you through, and then please don't procrastinate. A lot of people, that's why they're not getting good things in life, because they're just good in planning, and they will suffer paralysis by analysis. Unlike most entrepreneurs, when they see opportunity, they don't think twice. They just like, let's go. Let's give it a try. Let's go to the uncharted waters. Why we gonna be afraid of uncharted waters? Well, don't be afraid, because in this journey with us, you will be we will be working side by side in this journey. So you will be in good hands when we talk about trading. Like we told you, we are traders. We are trading every day. This is what we do for life. So we're not just like talk and not walk the talk. Okay, I'll pass you back to Christiana. I think they're ready.
Okay, so forgive us for the technical difficulty, and I think Alexis will be ready in a few seconds.
Can you hear me properly?
Yeah,
Take it away.
take it away.
All right, really sorry about that. I was facing some technical difficulties. All right, I hope everyone's all good. Let's just jump right into our last financial literacy trading training for today. Let me just share my screen. Okay, I hope you can see my screen. So just a quick recap about what we learned from last training was we expounded on market manipulation, and we spoke about the patterns that market makers usually use when they actually manipulate the market. And we made ourselves familiar with that so that we won't fall into that trap and let our unawareness of it get the better of us. And we also spoke about solid market structure and the fake market structure, and how those are two ways that can help you identify when certain market manipulation is happening, right? And then we also spoke about fractal divergence, how fractal divergence is just a simple divergence within a simple divergence. We went through some examples, and we spoke about the fractal bar. Remember, the fractal bar is a way for you to spot a second-degree fractal divergence within one candlestick. All right, and we also went through some more types of candle bars. We spoke about the pressure bar, the inside and the outside bar, the hybrid bar, which is when a candlestick or a candle bar has two or more of the qualities, and how you interpret them. We also spoke about frequencies, how frequencies only have to do with the candle wicks, does not violate the candle bodies. Okay, so for today, we're going to jump right in and move on. So it's going to get a little more complex, and I understand that it's just a 3 to 8 thing. So yeah, just try to understand it and then practice it for yourself, because it never really sinks in until you experience it for yourself. And also for those of you who are present in our CryptoBox meetings, just a disclaimer, you might find this a bit repetitive, because what we went through there is what I'm teaching here too. Okay, so let us begin. Today, we're going to dive deeper into price action analysis, and we will start that by talking about line theory. Just checking, can you see my slides? Okay.
Yes.
So to do with line theory, we're going to go through 9 principles of lines, all right? we'll take them at a time. So first we'll go through the first three, pretty basic, pretty straightforward: anchoring, extension, and validation. Okay, so anchoring is how lines are grounded on certain price levels, and we sort of covered this last meeting when we spoke about abstract anchoring your lines in abstract and real anchors. Okay, so there's two types of anchoring. There's real anchoring and there's abstract anchoring. So real anchoring is grounding lines on market extremes that are obvious to most people. And abstract anchoring are lines that are grounded on frequencies. All right, remember frequencies have to do with the candle wicks or in abstract vector spaces. So let us expound on that. Okay, so this is an example of a real anchor. Notice how it is, I just connected two edges of the candle wicks very clearly, right? And this is an example of an abstract anchor. Notice how it's not, at first it was grounded on the edge of this candlestick, but notice how here it is not necessarily connected to the very end of this here low, this candlestick. It goes through the frequencies. Okay, so this is abstract, all right? And here again, it touches the edge of this candlestick. And here, again, not necessarily the edge. So this is an example of your abstract anchor. Again, this one is your real anchor, the one that is obvious, okay? So pretty straightforward. We're moving on to extension. So the idea of extension is connection between two or more anchoring points that can be extended into the future to generate probable barriers for price. Okay, so what does that mean? Example over here, we have our line, our real anchor. Okay, so the principle of extension basically means that what happens when I extend this line? So let's say if I connected these two candlesticks right here, right? Following the principle of extension, notice how very nicely and precisely it catches that third group of candlesticks over here. Okay, so that's basically it. Okay, so the third is validation. Validation is basically the principle that claims that if a line has been performing well in the recent past, it tends to perform well in the near future. And we do that by analyzing past frequencies interaction with the line in question. So what does that mean? This is very useful because, as we said, the downside of having support and resistance lines, all these different lines, is that you can find a lot of them in the charts, in the market. And also given the fact that we as human beings are have very strong pattern recognition, cognitive biases, right? So we need to be able to discern which lines are logically useful and actually useful, not just because we think they're useful, because it appears a lot. Okay, so validation helps you to take some of the guesswork out of that. So again, if a line has been performing well in the recent past, it tends to perform well in the near future. So example over here, we've got a pitchfork. We will dive into the pitchfork later on, but this is an example of a pitchfork that was anchored over here, this low second high and 0.3 over here. All right, so notice how in the recent past, the line produced by this pitchfork, right, very nicely acts as a support again here. So it has been performing well. And look how many times price respects this line produced by this pitchfork over here in the near future. All right, so this is an example of validation. If a line has been performing well in the recent past, it tends to perform well in the near future. Another example over here, where our pitchfork was anchored at this low over here, indicated by this red box. All right, in the recent past, price has reached that, respected that line twice, okay? And in the near future, notice how precisely it acts as a support before a reversal or at a reversal twice. Okay, so let's move on to extrapolation. So extrapolation has quite a few subcategories, and there are different kinds of extrapolation. There's line extrapolation and action space extrapolation. So let's take it together one at a time, okay? All right, so line extrapolation, action space extrapolation, and vector extrapolation. Let's start with simple line extrapolation. So a line in the chart that is copied to another anchoring position in the chart, respecting the same angle of the original line. So notice when we draw our frequency lines, they are sloped, right? And when we copy them, or like we say, extrapolate them, they have to respect that same angle that the real original line was drawn in. An example of that would be this. Okay, so regardless if it's a real or abstract anchor over here, this here is our real, our original line. Okay, notice how price respects it as an extreme several times. Okay, and what did we do? We extrapolated it. We copied it, and notice the line that we copied respects the same angle. Okay, and so after we extrapolated that line, notice how as a support, it also very nicely catches the edges of the bottom of the market over here. And when you extend that, notice how it catches a reversal over here. So that is simply what simple line extrapolation means. Okay, so adding on to that, non-equidistant extrapolation is connecting two or more extremes to generate an angle, all right, just like before, and then extrapolate a line with the same angle, just like before, to other extremes, creating non-equidistant spaces between the lines. So let's look at an example. For continuity purposes, we're using the same example. So you see, if you remember, the most extreme top and the most extreme bottom lines are the lines that we drew before from our example of the simple line extrapolation. Okay, so non-equidistant extrapolation is when you extrapolate that same line, same angle, but you anchor it into a different place at the chart. Like over here, notice that it is the same line. We just basically copied it, anchored it into a different anchoring point, and notice how very nicely price respects it as a support over here, as a mini edge within this market space. Okay, and it was the same thing with this dark blue line over here, the third line from the top. All right, and why it's called non-equidistant line, because you are anchoring this same line in a different place, in a different anchor in the market, giving no regard to the space in between. So it doesn't matter if the space is equal or not. That's why it's called non-equidistant. All right. So notice how with our non-equidistant extrapolated lines, all right, it acts as a support, as a within barrier within the bigger barrier. All right, and this is useful because again, there are different types of traders with different personalities, and some of them might want to scalp, right, the small movements up and down rather than always trying to catch the big waves. Okay. So now we're going to move on to action space extrapolation. So earlier, remember that was line extrapolation. With underline extrapolation, we had simple line extrapolation and non-equidistant line extrapolation. So now we're going to talk about the action space, and this is a little different because earlier we were extrapolating the lines that were drawn in a certain angle. But here, so action space has to do with when we create a simple line extrapolation, the space in between those two lines is what you call the action space. So just like we extrapolate a line from another line, we can extrapolate an entire action space between those lines as well. And that is called space extrapolation. So let's look at some examples. All right, so we will first go through what is called Newtonian action space extrapolation. So for those of you who aren't familiar, this is based on Newton's third law of motion, which is for every action, there is an equal and opposite reaction. All right. So how do you go about approaching this? So you create a simple line extrapolation. The space in between, like we said, the two lines is called your action space, right? And after that, you extrapolate the whole space up or down equidistantly. It has to have the same distance as the first original action space, following Newton's third law to create a reaction space. So that is what this is for. Example over here, assuming you cannot see the second right side, the right side of this chart here, right? Because when you trade live, it plays out one by one. You don't see everything and you don't see the outcome. So let's just, for the sake of this example, pretend you can't see the right side of this chart. All right, and notice how at first price was going down, right? And then it looks to be a reversal. So if price reverses and it starts to go up, right? We need to sort of find out or limit the space that price will potentially react in. Okay, because if it was going down, we can base it off of its trend going down. But then if there was a reversal like over here, this space would have been blank and you wouldn't know how high price would go or how far price will go. All right. So this helps us to limit sort of gives us potential space where price may react. All right. So let's say over here, you've got your line. All right. And you extrapolated that line. Okay. So now you have your space in between. All right. And again, what is this space called? This is the action space. And what are we extrapolating this time? We're extrapolating the space. So what you do, you measure that space in between and you extrapolate your lines. You extrapolate your space accordingly. And the key word is equidistantly. It has to have the same distance in between as your original action space. Okay? Because again, every action has a equal and opposite reaction according to Newton's third law of motion. So notice how once we have extrapolated our space equidistantly, how very, very precisely it catches this reversal, this extreme at this point in price over here, and how very accurately it acts as a support over here where price goes up and bounces just right, touching this here, a line that we extrapolated. And then price bounced right up and stopped again at another line that we extrapolated. So imagine having to trade and without those lines, right? You would have close to zero idea as to how far price would go. So this takes some of the guesswork out, right? And that is what we can do as much as possible because we can never be sure of where the market is going. All right. No matter how good your analysis, at best, it acts as a guide. And why I say that, because it's very important for us to remember that there is always the possibility that we are wrong. And that is why we talk about risk management. Okay. So anyway, so over here, price shot up, bounced off of the line that we just extrapolated, and then respects this line here as a barrier. And notice how very nicely price, even though price is consolidating, right? It's consolidating at an angle, and it's consolidating at the angle within our reaction space that we extrapolated. Okay. So I hope you can see how useful these tools are in your technical analysis. All right, let's move on. Yeah, so these, as highlighted by the green boxes over here, those are all the times that price respected our extrapolated action space, equidistant action space extrapolation. Okay, so now we're going to touch a bit on the Fibonacci action space extrapolation. So still, same idea of the space extrapolation. Your action space is the space between the two lines that you have drawn, all right? But this time, it's not extrapolated equidistantly. It is extrapolated following a Fibonacci ratio. So same thing, you create a simple line extrapolation. The space between the lines is called the action space. And after that, you extrapolate this space up or down following a fib ratio to create the projection. All right, so I do highly encourage you guys to try this out for yourself. Experiment, okay? And try to observe for yourself when price respects and how often price respects these lines that you draw based on the Newtonian action space extrapolation or the Fibonacci ratios. So over here, there are several tools, Fibonacci tools. Okay, so for this example, what I used was the Fibonacci extension tool. All right, so as the definition earlier said, first we create a simple line extrapolation. So this white line up here is my first drawn line. I extrapolated it very nicely, acts as a support at the bottom over here. And using the fib extension tool, I anchored it from this high and this low and this high. And what was that? That is basically my action space. Okay, I anchored it into my action space within my action space, right? And then over here is your fib ratios. So what did I do? I extrapolated a line, same angle, and I anchored it on over here, the 100%, if I'm not wrong, of the Fibonacci ratio. And notice how very nicely it catches the very edge of that before price started drastically reversing. Okay, so why is precision important? Because we, not just for your stop loss purposes, but even your take profits, what do you input there? You input a very specific price. All right, and it hurts a lot when price goes near your take profit or near your take profit, but doesn't actually catch it. So always keep in mind to put some sort of leeway, be conservative when you place your take profits, because you will be very sad when price goes near there but doesn't catch your order. All right. And that's why we try our best with the technical analysis to be as precise as possible. All right, so now we're going to cover negative extrapolation. 1 minute break, everyone, before we go on. All righty. Okay, so far we've spoken about anchoring things based on things that we can see in the chart, which are our candlesticks, our solid market structures, our highs and our lows, right? So now we are going to enter the dimension of tapping into the negative space in our charts, the negative space in our market, and using them as potential anchors. Okay, so negative extrapolation. Every price travels through space, which is represented by the y-axis, and time, represented by the x-axis in the chart. So the negative market theory claims that real vectors have mirrored image in space and time, and these hidden abstract vectors can unveil interesting anchors and angles. All right, so starting with the single vector negative extrapolation, you pick one price vector and draw its three mirrored images in space and time. From this point, you have a series of abstract anchoring points that make geometric sense. Okay, let's go through an example so we can understand what this means. Again, your vector is just that line connecting 2 points in price into a line that is your vector. All right, so example, this is our real price vector. Okay, so what does the definition again say? That in the negative space in the market, price has a mirrored image in space and time. So let us temporally mirror our real price vector. So then that would look like this. Okay, it's a temporal mirror image because it mirrors price opposite mirroring its time. Okay, the space that price changed is still the same. Is it clear? Because again, right, maybe you can understand it through the height of it is the space of how much price changes. But notice how the height of these two arrows are the same because we're only trying to get the opposite, the reflection, the mirror image of time, temporal mirrored image. All right. And we do the same. So this time it is a spatial mirrored image because, right, your time is grounded in 0, but it's mirrored in the space based on the how much price changed within its space. Okay, and this here is your spatial temporal mirrored image. Okay, because it's a mirrored image of our real price vector, a reflection of it, a mirror of it, according to its space and time. That's why it's spatial temporal mirrored image. All right, so how is this useful? Let's look at this example over here. Okay, so your white line over here, this is our real price vector, right? And what did we do? We mirror it temporally through this blue line over here. All right, notice how the height is the same. Okay, and at the bottom over here, again, what is this? A mirror image of it spatially, a spatial mirrored image of our real price vector. And over here, we have our temporal spatial mirror image. Okay. All right, so I made the bottom two vectors black because just so it's easier for me to bring your attention to the lines on top. All right, so, right, notice how over here, this blue line again is my spatial, my temporal mirror image of my real price vector, okay? Now what happens? What happens? I use it again. What is the usefulness of this? It gives us new spaces in negative market space to use as anchors, to anchor our lines on. So what did I do? That I did exactly that. I anchored this yellow line here on my negative market space temporal mirror image of my real price vector. Okay. And notice how when I connect that to the midpoint of my real price vector and I extend it, okay, few candlesticks later, it catches price over here, and even more candlesticks later, it very, very accurately and precisely catches a reversal over there. Okay. Following so far, I hope everything's making sense so far. So let's add on, let's expound to that example. All right, so same lines earlier, but this time we anchored our pitchfork on the negative market space. Okay, so notice how our first anchor of our pitchfork was anchored on this temporal spatial mirror image of our real price vector, and then anchored again over here to our the base of our real price vector. And the third anchor was anchored on our spatial mirror image of our real price vector. And very interestingly enough, notice how the lines produced from our pitchfork, right? Notice how price respects this line here, right, as a support once, twice, acts as a resistance over here, consolidates along that line of our pitchfork, right, many times. And it's not just that one line. The edge of our pitchfork actually very nicely marks out the edge of the market here. As you can see, it acted as a barrier that price actually respected 3 times. Okay. And this middle line over here produced by a pitchfork, notice how used with the line above it, right? Even if price consolidates in small waves, it does so within that barrier, okay? Within that potential reaction space. All right. And over here, price drastically dropped. Okay, so now you've got your very nice catching the two extremes of the market using both our the line that we draw earlier and our pitchfork now. Okay, notice how after price rose, dropped drastically, but then drastically dropped at our extended line over here. And then it goes back up, and then it respects the edge of this line and this pitchfork over here. Okay. All right, so another minute to let that sink in before we move on. It's still related, but it's slightly different. Okay, and next is vector decomposition. Okay, so vector decomposition has to do with the so every price vector has a temporal and a spatial dimension implied in it. So what we can do is we can decompose a real price vector into purely spatial abstract vectors and purely temporal abstract vectors. So this is in some way it's a little similar to the mirror image, right? The commonality of vector decomposition and the mirror image is that it exists in negative market space and it produces potential abstract anchors for us to anchor our lines on. But then this time we're not doing a mirror image, okay? But it still exists within negative market space. And this is called vector decomposition. So let's say this here is your real price vector. All right. And over here, you got your purely spatial vector. Okay, so notice how the time is grounded at 0, and we're only taking the space of how much price changed in terms of space, not regarding over time. That's why it manifests itself as a vertical line. All right. So how you can tell that is that the height is exactly the same as the real price vector. And this here is your purely temporal vector, is how much time price changed, and your space is grounded at 0, and that's why it looks like a horizontal line. Okay, how is this useful to us? This is useful to us because the decomposed vector creates abstract anchor points, all right, that yield new angles for future projections. And to sort of limit it, right, you can use the midpoints and the extremes as potential anchors, right? Because it will be very hard for us to discern which one's useful if we anchor, like where do we anchor? Exactly where do we anchor our lines? All right, we anchor it at the midpoints or the extremes of our decomposed vectors. Okay, so let's just slowly reiterate that again. This green line here is our real price vector. This line here is our purely spatial vector. And this line here is our purely temporal decomposed vector. And for this real price vector over here, this gray line on top is your purely temporal vector, decomposed vector. And this line pointing downwards over here is your purely spatial decomposed vector. And you mark out the midpoints and the extremes, because those are the places where you can potentially anchor your lines in the negative market space. So let's look at this example. Okay, so first, represented by the yellow lines, the thicker yellow lines, these are my real price vectors. Notice how I simply connected the low with the high of this market structure and to the low. Simple, okay? There's my real price vector. So since my real price vectors are made up of two lines, I'm going to decompose them by each vector. So let's start with the yellow line on this left side going up here. All right, to decompose it, purely spatial decomposed vector represented by this thin white line over here. All right, notice how the height is the same. Okay, and this thin white line at the bottom of it over here is my purely temporal decomposed vector. All right, and then now we do the same for this yellow, the second vector. Okay, we decompose it by vector. So yellow line over here pointing downwards is my real price vector. The thin white line on top over here is my purely temporal decomposed vector. And the thin line, vertical line down here is my purely spatial decomposed vector for this second real price vector over here. All right, and again, where can we potentially anchor our points within the decomposed vectors? At the midpoints or the extremes. So what did I do over here? Midpoint, mark out the midpoint of this here's decomposed vector, right? This is my midpoint. And for this decomposed vector over here, the midpoint was here. And now represented by the purple line, I simply connected those two midpoints of the decomposed vectors and I extended it, right? Notice how many times it acts as a resistance for price. And again, a very precise support over here. Okay, do you see now how to apply anchoring your lines in decomposed vectors and how useful that is? So another example, so what did we do? Furthermore, we extrapolated that same line. So if it's not clear to you, these two lines have the same angle. They were copied, they were extrapolated. So we extrapolated our first bottom violet line and we anchored it in a different place in the price chart. We anchored it at this candlestick at the very top of this candlestick over here. And notice how very nicely it catches the reversal over here. It marks out your extreme of the market and price reverse. Okay. All right. Is there anything next? So let us answer some questions. I believe Jonas has already mentioned that we are giving away. Has Jonas mentioned it? Okay, give us a moment.
Okay, is my video on? Okay, so yes, as Alexis was mentioning, our CEO Jonas will be taking over as he has some announcements to make. Actually, chances of winning prizes while you're attending these trading trainings.
Yes, so like we said, we want active participation and the trainings that we are giving actually, and not only that, because today is the end of the theory for the next for the past three sessions that we have. Tomorrow we will start the laboratory. We will announce exactly what time will the laboratory starts, because we don't just want all this theory to go into waste. Because guys, if we just listen and watch and we don't practice, nothing's gonna happen. Well, practice is actually putting into action what we have learned, and only then, if we put into action what we have learned with our guidance, it will be more. It will be more. It will create a memory in your brain. You know, it's all about muscle memory. It's all about muscle memory, where you are able to recall and repeat the process yourself. If you can see, guys, this is all about price action interpretation, price action technical analysis. We don't work with oscillators because they're filtered out, they're delayed. In our price action, if you can see, Alexis actually can plot. She can plot different lines, and then, however, if you can see the chart, the price action respects the lines. It's just like, if you're a navigator, if you're a captain of the ship or you're the pilot of an airplane, before you go to a certain destination, you plot your your trajectory, you plot your your path, your route, putting into consideration the factors that will come at play, like wind, like water current, like the weather, uh, a lot of things actually. And that's also what we're trying to do here in our charting. And in order to move us to the next level, today I will tell you guys that we're giving away $100 worth of credit to your Crypto Box exchange account. So what we will do is, Alexis will be asking you questions, and for those who can answer the question, they should raise their hand first, and then for those who can answer the question, will get $10. However, if you don't have a CryptoBox exchange account, that $10 will not be useful to you. And that's the reason why you need to create your CryptoBox exchange account, and you have to give us your e-wallet address, such that we can move your $10 into your CryptoBox exchange account, very specific e-wallet address. And we will be doing this continuously, like, just to make sure that there's a motivation for, well, giving yourself a chance to have financial freedom is motivation enough. You're not kids actually that you need the lollipop or sweets to get motivated to do something. Uh, Giving yourself financial freedom and the generations to come is should be a very, very great motivation for you guys. We are recording this session anyway. You can review what Alexis has lectured to you, and then, because like I said, this is going to be a continuous process. The next stage of this is actually the laboratory where you will apply what you have learned with our guidance, and then from there you can slowly start on your own. Okay, so I'll pass it back to Alexis. She'll be asking 10 questions today, and every question is for the $10 of CryptoBox exchange credit. Means we will load your CryptoBox exchange account with $10 if you're able to answer the question. For those who have given the correct answer, let's give other participants a chance to actually also participate and claim the $10 if you already have received the $10. However, if you want to cooperate and participate, of course, we welcome your answer. Okay, so pass it back to Christiana, and she will pass it back to Alexis. Thank you very much.
Okay, so everybody, are you ready for the 10 questions? 10 questions? 10 questions.
Yeah, one question at a time.
Okay, so are you ready for the questions? I hope everybody was listening and to have a chance to win some credits for your trading. So I think this is a really fun thing that we have. So can we have Alexis back? Be prepared, take out your notes. So this is open book. If you were listening, this will be really easy for you.
Okay, don't worry. I'm not a big fan of memorization. I'm not going to test you on the terminology. I think what's most important is that you understand. Okay, so the first 5 questions will just be like answering, and the next 5 questions will actually be, okay, I'll just mention it later. So first, what are at least 2 criteria a trader must check before opening a trade? At least 2, anybody? At least 2 criteria a trader should think about before opening a trade. Joshua Pastori raised your hand.
Thank you. Let me try.
Yeah, go ahead.
Maybe number 1, the technical analysis, and the number 2, the fundamental analysis.
Yeah, that's good. That's good. Yannick also raised their hand. Would you like to answer too? All right, support and resistance lines. Yeah, that's under technical analysis. And one more? Or are you just answering half of this question? Well, I mean, it's considered as 2 questions, so that's still a question answered. All right, very good. So yes, your technical analysis, and under your, yes, very important, actually, the fundamentals, the context behind your trade. So first, you've got your context, your technical analysis, everything is under that. And I'm just going to mention one that entry price. Thank you, Mr. Solomon. I'm just going to mention another one that cognitive bias. Yes, thank you, Jerome. Got that. All right. Yeah, that all falls under the umbrella of technical analysis. Very good. Can someone give me? Oh, that's right. That was the answer that no one has mentioned. Your risk reward ratio. So, or generally, basically, your risk management. Okay, so other than your fundamentals, your technical analysis, your context, you need to weigh out whether it is worth opening this trade, whether it's worth risking your capital in the market. Okay, very important. So great job, everyone. But because Joshua Pastori answered those 2 first questions first, Jonas, can I leave the scoring system to you?
Listen, Joshua got it first, right?
Yeah, Joshua Pastori answered first, but Pasquale is actually the one who also answered the one that nobody else mentioned.
Oh.
So Joshua Pastori and Shio Pasquale.
Okay.
And yeah. Okay, and thank you everyone else too for mentioning. But then those answers also fell under the umbrella of what Mr. Joshua Pastori has already answered. Okay, I like this. All right, so second question. What is the hierarchy of signals? Okay, this is a bit important. That's why I'm asking it. All right, this has to do with your time frames. Remember, so the higher the time frame is what, and the lower the time frame is what. What do you get? Because these are very basic and very basic principles and guidelines that are a basis of your technical analysis? Hierarchy of signals, anyone? It has to do with your time frames. Yes, Jasper Borromeo. You can go ahead and, are they allowed to unmute themselves? Yeah, you can go ahead and unmute. Hi.
Price action reading must be organic. Something like that.
All right. But the question is asking the hierarchy of signals. Remember your time frames? The bigger the time frame, Celestin is asking what the question is again. What is your hierarchy of signals? Okay, because you can get many signals, but which signals are stronger than the other? Yes, Yannico. Thank you for trying though, Mr. Jasper Romeo. That is right. That is absolutely right. So just to reiterate, the question has already been answered. It's what Yannico said. The hierarchy of signals has to do with the bigger the time frame, the stronger the signal, or the higher the time frame, the stronger your signal power. But the lower your time frame, the more detail you get. Okay, that is exactly right. All right, so okay, and now, so that was already 3 questions so far. My last 2 questions for this part is, I think you guys are gonna have to be quick about this because everyone has. That's it. That is it. So for me, I normally use 1 day price action. Oh, you usually the daily chart. All right, so the next 2 questions, everyone get ready because I'm sure all of you have many answers for this. But you have to give me at least 2 forms, okay? Any 2 forms of technical analysis that we learned. Any 2 forms. Because we went through a great many. Yes, Kenneth Tolentino. Okay, good for Daniel. Duarte said anchoring. Kenneth Tolentino, you raised your hand. Would you like to answer the question? You're still muted. I can't hear anything. Okay. So for the first 3, okay, we'll try relative strength and resistance and candlesticks. All right, good. Kenneth Tolentino. Jerome Gabat said support and resistance and also divergence. Very good. Senpai said fractal bar and pressure bar. Also very good. And Fabian Wandi said support and resistance. I love how all of you gave varying answers. It really gives me feedback that everyone was listening. Thank you, kids. Trend lines. Yes, it's easier, even though ideally we'd like to trade the reversals, but it is easier to trade along the trend. Mr. Solomon said chart pattern and indicators. All right. I'll leave the point system for that with you. Okay, so that is it for the question and answer candlestick interpretation. Thank you, Michaela. Yes, we went through several ways of recognizing, interpreting the candlesticks. All right. So I would give it to Kenneth Tolentino, Jerome Gabat also, Senpai also, Fabian Wandi gave good answer. All right. I will stop it. I'm only taking the answers that are also different from what other people have answered. And Kenneth Tolentino. Yeah, I already said that. Okay. Sorry. No, also Michaela gave a good answer. All right. All right, so for the more important section of this question and answer, we are going to analyze a chart, okay? So any observation you make, use any form of technical analysis that you've learned, you give me 1 point, all right? Just, I'll limit it to one observation, one analytical observation per person, okay? So I've got this captured chart. It's not currently live, but it was live at the time, all right? And I also captured the outcome. So we are going to observe it together. Each person who is willing and wants to get the credits, give me 1, all right? Let's limit it to 1 analytical observation per person, all right? And I'll type it out, and then we'll see how the market actually turned out, and we'll see what went wrong with our analysis, if ever, okay? So, because that is the more important part of it, you should be able to know how to identify these things on your own when looking at the chart. So, all right, I hope you can see my screen. So ignore those little lines. Anyone limited 1 analytical observation through technical analysis per person about this chart. This is the 1-hour chart. Asset is Bitcoin against the US dollar. Joshua Pastori raised his hand. Go ahead.
Okay, thank you. I don't know if I've got correct your question, but try to use the RSI, Relative Strength Index.
All right. So what about the relative strength index?
Okay. The indicator helps to understand if the trade is overbought or oversold.
All right. So what does that tell you? Where do you, using the RSI, where do you think, what is it telling you that the direction, regards to the direction where the price is going to go?
Okay, if the RSI is below 30, it means it's oversold. Now it's a good entry for me to chip in the market. And if it's above 70, it means it's overbought. Now it's time for the market to crash down.
All right. Okay. So,
but
judging, yeah.
But what I see on the screen, you can see the line is showing that it's like moving up. Okay, I cannot see. Okay, it's almost below. Maybe you can put the cursor there, and I see.
It's about at
50.
it
is below 50, almost 50.79. So it's not a bad entry. And you can see it shows that there is a signal that's showing that it's going up.
Okay, so what entry would you place? A long?
Yes.
Okay.
A long.
Because very good. Thank you, Mr. Joshua Pastori. All right, let me just type this out. Long entry because RSI indicates oversold, so price may rise in the near future. Yes. Okay, who wants to make the next analysis? Fabian Wandi?
Yes, good afternoon. I can see that where the market is at a support zone where the market
you saw this. Okay.
Yeah. So the first thing I noticed was that the volume the volume is very weak.
Very good.
Volume, yeah, so if the volume is weak, I just saw from the RSI that the market, it was overbought at this point.
All right.
No, just before the time, just a few candlesticks is 1, 2, 3, 4, 5, 6, 7 candlesticks. I saw that the market was overbought. So at this point, I will place a short. Right now, I'll place a short because I see that the market will easily break down this support.
Okay, thank you very much. Break support. We'll open short. Very interesting how different, see all your different personalities are coming up, and the fact that we've got different observations. So I'm going to place those who are going to open short on the left side and the observations that would like to open long on the right side. All right, wait, before, let me just, someone answered in the chat, Gwen Jang Kobe says, RSI sellers are having more power than buyer for me. It's going down. Okay, let's just indicate that in here. Kobe says, according to the RSI, sellers are having more power. Sellers are stronger. Therefore, price will drop. Okay. All right, and so Minkela, would you like to add in your input?
Hi, everyone. Thank you so much, Alexis. I hope
Hi.
everyone can hear me.
Yeah, we can. Yeah.
Great. So it's been wonderful following and also upgrading our knowledge in the trading. And I've been learning a lot from your teaching so far. And I want to share from the charts I see here, making reference to the moving average and also the RSI. I will go for an up direction. So I'll go for a long. And I also see the candlestick, especially the last candlestick, you can see something like a manipulation going on there. So as a technical, as a trader, you need to really analyze and then you know the position to put it. If you look at the previous high, the previous higher high at the other side of it, when you look at the RSI model, you can see that it's going up and the previous higher is higher than the previous high on the chart. If you can see where we have number 2 and also between number 2 and number 3 on the chart, that's a period. But on the candlestick, you rather see that the previous, high is what is higher than the current. I don't know if everybody understand what I mean, but so I would rather go for a long position here because per the analysis here, I see like the market is taking another direction, which is going to go high. It looks like a divergence form of stuff.
Exactly, wonderful. Okay, so just to simplify what Michaela said, actually he identified a divergence between price and momentum.
Exactly.
Okay, so just to reiterate, remember we tried, although yes, you can use the RSI for overbought and oversold zones. Remember, that is a bit dangerous because as you can see on a trending day, price can visit the overbought zone many times, so that doesn't necessarily mean it's going to drop. Remember, we went through that. So what we use the RSI for is to point out divergences here. So as what Michaela explained is that the price looks like it's going up, but as you can see, we see momentum as the energy, but the energy is unable to produce a higher high than the previous high. So that tells us that even though price looks like it's going up, it is the buyers are losing energy. So Michaela would place a long because there's a divergence in price and momentum. All right. Over here. So we've got 4 observations so far, right? Anyone want to give one last go? We'll see which side wins. But all of you are getting points for giving the analysis, regardless of whether you're right or wrong. let's have one last. Anybody? Did you take note of who gave the analysis? Okay.
I think for this, they're polarized.
Okay. Nobody so far? Oh, sorry. Okay. All right. So before we look at the outcome, let us go through it together. All right. Let's. Is someone raising their hand, or is that done? No. Okay. All right. So, right. Let's listen to the story of the chart. Right. First, there was a big dip over here, and then it rose over here. And as someone pointed out, yes, the volume initially was very active, and then it became quiet. The market became quiet. Okay. So I sort of gave away, I drew a support line over here. I couldn't erase it. So this here was a strong support. All right. So price pierced through and bounced off of that support several times, went up, okay, produced a higher high than the previous high, and then started to consolidate. Okay, started to consolidate, and then it reached our support again. So another thing, a candlestick observation, I think Mr. Fabian explained it earlier. Another thing, interesting part, look at this. So before you decide whether to buy or sell, you want to know, since we can choose which side we will go for, obviously we want to choose the winning side, right? So judging from the most recent candlesticks here, okay, notice how it only took the buyers 4 or 5 candlesticks to bring price back up compared to how many candlesticks it took the sellers to bring price down. Okay, it took the buyers 4 to 5 candlesticks to bring up price the same amount that it took the sellers 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candlesticks to bring down. So that's also another sort of type of observation that you can see from this, that the buyers could be still stronger than the sellers, right? And another thing, it has reached a pretty strong support. Okay, so what happens? It could break support or it could bounce off of your support. And then, as Yasmin and Kayla identified, there was actually a divergence here between the peaks, right? Momentum is going down, even though price is going up. So this tells us that buyers are losing energy. Okay, let's look at the outcome. Let me clear all my drawings. All right, so yes, it actually went up drastically after consolidating for a while. Okay, but congratulations to all of you for your technical input. So where did we go wrong? Okay, so right, notice how if I just use my RSI in terms of the overbought and oversold zone, how that can mislead you. Okay, so what we can use it for is identifying divergence between price and momentum. Okay, and yes, it has reached a strong support. All right, and your support had validation because it has reached time several times, and this is the 1 hour chart. So what does that tell us about the signal power of this support line? It is quite strong. All right, and notice how price yeah, so this is what I pointed out earlier. Buyers still stronger than sellers despite the downward trend. This observation was made through candlestick relativity comparison. So that observation was made by comparing the candlesticks with the candlesticks around it. All right, that's another important thing to note when analyzing candlesticks. Okay, you do not compare this candlestick here with a candlestick over there. No, you compare it with the candlesticks around it. All right, and yes, so price actually ended up going up, but thank you everyone for your inputs and your technical analysis. It's very fulfilling for me knowing that everyone is actually taking something away from this. So yeah, I think that is all I have for you today, and thank you so much for being here and for participating. We have taken note, and don't worry, this is recorded. We can track down who we owe the prizes to. So Thank you so much. I'll pass you back to Christiania.
Okay, so that was really great to see. There was so much participation from everybody today, and as I'm seeing the number of participants, they have increased, and I hope those people who just came in, I hope they did not miss anything, but don't fret. As I mentioned, we are going to be having this every I keep forgetting the dates. Thursday, Saturday, and Monday. Okay, so Thursday, Saturday, Monday, that is when we're holding these trading trainings. So, so far, this is the third one that we've conducted, and the first time where we've actually done a sort of little activity at the end, and it seems like we're getting a very positive response from the people, very a lot of active participation. So do look forward to a lot more of these. And as yes, Alexis has mentioned, it's actually amazing because you guys were able to answer the questions that she has given all of you. And yes, as mentioned earlier, you're not just going to be taking home the knowledge. If you do actually are able to answer her questions, you can also stand to win just a little bit of prizes, and you can use this to actually trade if you you just keep collecting these. So yeah, and the next wait, do you want to say anything? Okay, so we will have some closing words once again from our CEO. So can we have him back on the stage?
Hello. Yes, thank you very much for the participation. It's very fulfilling to see that we have a very attentive audience here, very attentive trading trainees, and like we said, we will be doing our laboratory. We will announce. There will be more of this. Actually, exciting, right? Putting Turing into action. This will be from this community, very involved community. So we are really very happy to see that you guys are participating. You guys were listening to the discussion. But the next thing is, let's put it to work. Let's put it to work. Let's start doing the laboratory, because like I told you, theory plus action will give us better muscle memory. Everything that we remember is actually called muscle memory. So that's the secret of muscle memory. Before I proceed, guys, I told you before that while we're doing the training, we use signals as well. Our trade is doing good. For those who followed our signal, it's making money. So this is what you get from CryptoBox. We will teach you how to earn passive income, and now we will give you full passive income through our fund management platform, and now we're also teaching you how to fish, and we are also giving you signals. I think you get the best of everything. What else can you ask for? So invite your friends for our next start of session on Thursday. However, we'll be announcing probably later tomorrow in the group chat when our laboratory will start, because it's very satisfying. It's very satisfying to put these things into action. So thank you for today, and more power to our CryptoBox community and CryptoBox family. Thank you. I'll pass it back to Christian.
Okay, so there's a Celestine on the chat. I wish to get a recording of the last and today's class. Yes, we actually have been recording the previous classes as well, and I think we are going to upload it somewhere. So once they've actually been uploaded, we will drop the links. I think they will most probably be dropped during the Zoom meetings. So do watch out for that. Yeah, we will get the recording to you as soon as we can. So if there's anything else that any of you like to, I've seen a lot of positive feedback. After 1 year, we will have best professional traders. That is the dream. That's Joshua. So yeah, I mean, seeing all the energy that all of you have put in today, we are going nowhere but up. So let's all go there together. Okay, so that's actually it for our trading today. The next one we'll be having on Thursday. Yes, I'm still trying to. Okay, so the next trading training we'll be having on Thursday, you guys. So same time, same Zoom link, same password. And for those who are going to be attending the Zoom meeting as well, we will see you there once again. So that is it for today. Thank you, everybody, and have a great Monday.